You mentioned the tariffs, and I remember last time that you and I spoke, you had sort of seemed to suggest to me that maybe some of the tariff concerns that had been priced into the market were a little bit overdone. Now that we've actually had some concrete announcements from Trump and reciprocal tariffs coming from other trading partners, and then reciprocal tariffs coming from Trump, ping pong. Where do you stand on that?
Yeah, no, I mean, we maintain that view, but I think in some respects the shift to reciprocal tariffs, I mean, it might seem surprising that it was suddenly announced. Why wasn't this the opening foray in the trade war? I think it's been something, obviously, the administration's been thinking about. And I think in some respects it does shift the pendulum back a little bit in terms of the negotiating power that countries have when they sit down at the table, because if you want to expand your market share to the US, you have a better handle for the rules of the game now. If you can lower your tariffs, then you can secure more access. So I think that lots of moving parts, but I think reciprocal tariffs could actually be helpful rather than just a blanket scattergun approach in terms of how they are implemented. And of course the exchange rate effects are important, and the competitiveness is still helping as the dollar is going up and other countries are depreciating.
Yes.
How do you think North Asia is preparing itself against tariff threats from the US? Whether we're talking about South Korea, whether we're talking about Japan, Taiwan, that entire belt, and of course leading up and linking up to China.
Yeah, so I mean, I think from the monetary policy perspective, of course, we have a mix of economies. Some are interest rate focused, others are exchange rate focused. I guess to the extent that the US dollar remains strong in this environment, given the, I guess, euphoria around the tariff risks, that in itself does give some competitiveness advantage to the Asian economies if they are subjected to tariffs, if their currencies are weakening. So I think for policymakers who are focused on the currency, the main issue for them will just be to ensure stability and not sharp depreciations in local currencies. I think that domestic demand across the region is reasonable. It's picking up. I mean, certainly there is even signs from what our readings for China, which we talked earlier about, is improving. And so I think that, when it comes to navigating the tariffs, I think as I alluded to earlier, reciprocal tariffs does give some negotiating power back to the Asian economies in terms of them understanding what their market power is, what their market share is, and if they want to increase market share to the US, they know how to do it. And I think that that's a step forward. And of course, currency competitiveness is important, especially for Japan and China. Those are the two most competitive economies in the world at the moment on a real exchange rate basis. Japan number one and China number two.